Triangle Energy Global is an oil producer based in Western Australia. We have a field called Cliffhead Oil Field, which has been in production since 2006 and currently produces 1,200 barrels of oil a day. My background's predominantly in corporate finance, focusing on the oil and gas sector. I've been involved in projects on the east coast of Australia, Indonesia and Canada. I came into Triangle as Managing Director 2 years ago. Prior to that I was their corporate finance advisor, and we've had a restructure in that period. We were operating in Indonesia, a gas project that we sold to some local Indonesian investors. And with that we turned around with the cash we had to acquire our interest in the Cliffhead field in July last year. So specifically in the field, it was commissioned in 2006. It's the largest offshore oil discovery in Western Australia, south of the Northwest Shelf. The platform and infrastructure was commissioned and built for $350 million in 2006. And we have a current life remaining in that field of 2.7 million barrels, which will continue operations through to 2025. Well, it's oil. In a world where we hear of all these new sources of energy and electric cars and new battery sources, we're really sticking to a fairly, well, a very, very long, simple supplier of energy. It's crude oil. The market for the oil price over the last 6 or 7 years has declined from $100 a barrel to as low as $15 a barrel US. About 3 years ago, there's been some change within the producing industry of the oil. As a result of that, oil prices have now rebounded or stabilised probably at around $50 a barrel. So as such, a lot of these projects are becoming more viable again. And we've managed that process in the last 12 months since acquiring it to further reduce our cost of production of equivalent of $29 a barrel. Well, effectively, I mean, this is a fairly simple market, obviously. In essence, the oil is piped from the offshore platform, 10 kilometres offshore, to the Arrowsmith stabilisation plant, where in essence the oil is cut out of the water. We re-inject the water to the reservoir offshore, and our oil is trucked to Kwinana, south of Perth, and to BP, effectively. So BP pay us and then they convert it to diesel. In terms of milestones, we are, as part of our strategy and our infrastructure that we have, that was obviously expensive to build and not easy to replace, our first milestone is to obviously find more oil to utilise the infrastructure. We will be spudding a new offshore well to look for some more oil just to the south of us, 14 kilometres, for what's called the Xanadu prospect. That's targeting a 160 million barrel of oil structure, which is in essence 10 times the size of what we've produced in the last 10 years. However, if we do simply get that 10%, that's going to potentially add another 10 to 12 years of life to this existing infrastructure that we have. That's our first milestone. Secondly, we have an involvement with a conventional gas project in Queensland, and we're looking at a couple of options to finance that development of that gas project. It is, as I said, conventional gas. It doesn't involve fracture stimulation. It was discovered in the 50s. There's been 13 wells drilled already and has established flow rates. So as part of the obvious requirement for more gas on the east coast, it would appear that, well, we know that there's certainly investment money for that sort of project, so that's our next target to develop a field.